The world is not anymore the way it used to be. No, no, no.
Right, so we're going to look at points of interest on the 1 hour, the 4 hour, and the daily, right? You can even look at points of interest on the weekly too, right? So the higher you go in the time frame, the stronger that point of interest is going to be, right? So points of interest are what we look for are the last candlestick, right? Last candlestick before the move, right? So if we're looking at a point of interest, for example, if we saw a push down and we look for the point of interest, the point of interest is going to be this one right here, right? It's that last green candle.
Is that institutional candle up there?
So this right here would be the institutional candle. This
no,
right
up there. Yeah, that one
would be the point of interest. Let me zoom in so you can see it better, right? The point of interest is going to be that last green candle before the push down, right? So if we look for a point of interest down here, it's going to be, we saw the move up. It's going to be that last candlestick before the move up, right? So let me go to the 4 hour so we can see points of interest, right? So a point of interest, now we can see that, we have this one down here, right? This last red candlestick before the entire push, we start to identify that as the point of interest, right? So what we like to do with the point of interest is we're going to mark two parts on the point of interest, right? We're going to mark the top of it for sell, and we're also going to mark the middle of that candle, right, for the point of interest. So if I zoom in, notice I went ahead and I marked the top of that red candlestick, and then I marked the middle of that red candlestick, right? So what that tells us is price can do something like this, right? If price is coming down, it can rebound off of, it has two chances, right? It's going to rebound off of this and then push up, or it's going to go down and rebound off the middle of it and then push up, right? So that's how we start to get our entries for those good buys, because all we have to do is wait for price to come down to our level of interest, right? To our point of interest, and then push up, right? So let me go ahead and identify right here, right? So I'm gonna go, because I'm currently on this trade here, and I'm just gonna take everything out, right? So if I go to the weekly, where would be the point of interest that would send price down?
Up there. Go.
This one here, right? Because
this one.
This is the last green candlestick before the push down, right? So the reason I came in for sell is because I marked up, for this case, it would be the beginning of the candlestick, and also can't forget to mark the middle, right? So notice how price came up and all it did was tap right off of the middle of this one, right? That's why I was able to get such a really, really good entry, because I'm looking at the weekly point of interest, right? So price came up, tapped off, right? It broke through the first one, but we know that we have a second level to look at, right? We know that we have to mark up the middle of it, because that's the next level where it could start pushed down. That makes sense?
Mm-hmm.
Right? So now I can anticipate that since price came up and we can start to see it being rejected, right? We can start to see it rejected from this point of interest. I can expect it to maybe start heading down, right? But I got such a good entry, just very simple because of this point of interest, right? So
Mm-hmm.
let's go ahead and go to a different pair and just practice looking for points of interest.
But we also like looking at the liquidity too.
Let's go. Okay. Yeah,
Like,
let's go back to this one, right?
yeah, accumulation.
Right. So you what was that? What were you looking at? What's your question?
My pair?
Oh no, just you had a question on this one or no?
No, no.
Okay. So let's just head to another pair and we're just gonna practice on looking for um points of interest, right? So if I go to the 4-hour, where would be my if price, right? If price was to continue upward, and
Go up?
do you know
So
how to
like,
take control of the mouse?
I'm gonna try.
Yeah,
Where should I go?
so you can actually do it.
Where should I go?
You're gonna go back to the meeting, to the Zoom meeting.
Where?
It's gonna be at the top where it says remote control, or right next to annotate and pause is gonna be say remote control.
Share screen record. Click to start mode to control.
Yeah, awesome.
You
Perfect.
control.
Well, you can too. Okay. So
nice. Okay.
whenever I tell you to control it, you go ahead and control it. Okay.
Okay.
So now, right, if price is going up, right, if let's say we anticipate price is going to continue up, where can we look for a point of interest where it's going to start to head down, where we can anticipate, okay, it's going to reach a point of interest and start heading down? Where do you see a point of interest somewhere up top?
On the top. Oh, this one. If it go on the top.
Go ahead and use the mouse and show me. Right. So if price goes up. Okay. You can just hover over it, right? Or okay, yeah. So that's the point of interest at the bottom, right? That's the last green candlestick. So if price is heading up, right? If it continues up, right? We can wait for price to reach this point of interest up here. You see this one here?
Yeah.
Right. So as price travels up, we can wait for price to get here, and we know, or we got a good idea that price is going to then head down from there, right? So we mark the beginning, and then we also mark where else? The middle of that candlestick. Right, so if price continues to go up, then we know we can start to expect some sells from this area. Does that make sense?
Yeah, but so, like how we got, like why it should be there?
Huh?
Why it should be there?
Because this is the point of interest at the top, right? So for sells, we look at the point of interest at the top. For buys, we look at the point of interest at the bottom, right?
So it's gonna be go up and touch that and go
Exactly.
down again.
So if price does something like this, it goes up, it goes up, it goes up. We wait for it to reach boom, and then it drops, right? Or it can do this, right? Let's say it doesn't stop at the first one. It can go up, go up, go up, and it'll pass the first level, and then it'll hit the second level and then drop. Right, so those are your two entries off of points of interest. So if price drops, right, we can also mark this one. We can mark the top of it, and we can also mark the middle of it. Right, so if price goes down, we can wait for it to hit there, and then it'll go up, right? Or we can wait for it to hit the second one, and it hits the second one, and then from there it goes up. So points of interest are really, really important because they give us, you know, those good entries, right? It gives us entries at the top, and it gives us entries at the bottom, right? So look at this one right here, right? This was a point of interest at one point, right? Notice how it's the last candlestick that went up, right? This last red candlestick before the push up. So let's say this hadn't happened and we saw price coming down, right? We saw price coming down. It went up. We saw it coming down some more. We could have marked this off and say, we're going to mark the top of it, and we're going to mark the middle of it. And look what price did, right? Price literally came down and just tapped right off of it, right? It came and tapped right off and right there, and then that would be your entry, right? If I zoom in, look at this. Right, if I zoom in, look at how well it affected it, right? It just went boom, and then it went up, and then it just tapped, and this one even tapped both of them, and then went up, right? So you could have two entries off the point of interest. Your first entry is going to be the beginning of it, and then your second entry is going to be the middle of it. Right. So if we were, you know, scoping this one out, you know, your trade idea would look something like this, right? A long, and now your stop loss is very small.
Gonna be
because we're not gonna protect it right here. So your stop loss can be like 20 pips. Right. And now your take profit can be right here, right? Somewhere right here. That right there is a 10-1. Wow. I'm mad I didn't catch that one. But you know, that's how we use points of interest, right? So we're just gonna go ahead and keep practicing, right? We're gonna go to another pair and look for some points of interest. Right here, I could see a very, very clear point of interest. So let's say price was to go up, right? If price were to start trickling up, right, and go up, where can we mark 2 points of interest? I see 2 points of interest that can be marked. Go ahead and take this tool and mark the 2 points of interest, right? So meaning if price goes up, right, where is it likely to react from, right? Where is it likely to push down from?
I should use my mouse, right?
Yep, go ahead and use the ray.
Here?
Yep, that's 1 point of interest right there. Yep. And there's
you can see it, or?
Yeah, I can see it. Use the line, right? Use the line. because that's how we're gonna start to mark them up.
Which one? Arizona. Oh,
Yep.
can you? This one. This one?
Yep, that's a point of interest, but we gotta be accurate, right? We're gonna put it where at
Is it this up there?
yes. So we have two.
Oh, up there.
Let's focus on this one here. Let's focus on this one first, right? If price is going up, we're gonna mark the bottom of it, okay? And where else are we gonna mark?
In the middle.
In the middle of that green one, right? So we're gonna mark the middle of that. And now you have your two entries for this point of interest. Now go ahead and mark up this point of interest because we know that that's the last candlestick before the push, right? So go ahead and mark that one up.
So low.
Do you mind if I take a picture and put it on Instagram?
Yeah, you can.
I can tag you or not tag.
Is it good?
Wait, 1 second. Do it again. 1, 2.
Oh.
Let's go. 1, 2, 3. Awesome. That it came out good. It came out good. and I'll tag you. That way, you know, people could start seeing, oh, Peace trading.
Yeah. Like I'm really slow of the mark. I'm a person that really slow of the mark.
That's okay, right? Perfect. That's a perfect mark right there, right? And we mark up one more, right?
Oh, is it coming in the middle here?
Yep, right in the middle. Exactly. So whenever we see points of interest, we're always going to mark two parts on those points of interest, right? We're going to mark the beginning of it, or in this case, the bottom, right? And we're going to mark the middle, right? And that's how we're going to start to get our entries, right? So our entries will look something like this, right? We can mark our entry at the beginning. And it looks something like this. And then we'll have another one that's at the second spot, right? So that's how we can twin trade, right? We can have two.
And like, when you like do like twin trading like this, when it go up and it touch your entry, and you have to let it go down and it go up again and touch, or you put like two order in the same time.
Either, yeah, you can do one here, and then you can do another one right here, right? So sometimes it's not going to touch your second one. Sometimes it's just go up, and it's gonna touch the first one and then just drop, right?
Okay.
Sometimes it's going to touch both of them, right? So sometimes it can do something like this: go up, it hits your first one, and then it drops, and then it goes and hits the second one, and then it drops. Right, so that provides two entries off of the points of interest. Right, so let's just keep practicing. Right, where do we see another point of interest over here? Go ahead and mark it up for me.
Where? I think my computer is like this down, or
I don't. Yeah, it might be lagging. I don't see it.
if it goes down, I should put that there.
Yep.
This one.
That's a great point of interest right there, right? So go ahead and mark that. We're gonna mark the two spots.
Why is not something happen? Nothing happened.
Wait, click the line. You gotta click the line. And yep, perfect. So we have and now let's go ahead and mark.
Another one.
Yes, right. Now we know if price goes up, right? If price is traveling up, we know we can expect it to drop down
Yeah.
the area, right? So let me zoom out here. And since we see that price is heading down, right? We see prices going down right now. And we look for price to rebound up, right? We're gonna look for a point of interest somewhere at the bottom, right? For price to go and push up. Where can we find a point of interest?
The lower one.
Yep, that's one. Well, where there's one above.
Why nothing?
There's one above that that's a little closer to where price.
This one?
That is, yeah, that's a point of interest. But there's one higher, right? Look at this one. Even a little higher. More higher.
More high.
Up. More. Over here.
More.
Yeah. So look at this, right? This last push down. Right? So this before.
I think that this is last put down.
Yeah, but when
okay.
you see this one, right? When this one is closer to where price is, right? So price has to break this one first before it gets right. So that's why we'll mark this one here, and then the middle of that one. So when price travels down,
so it's gonna be take profit.
Yeah, that can be that. Like if you're selling already, that can be a take profit, right? Because we know that when price gets to this level right here, accumulation, it can start to push up, right? So yes, very good, very good. Let's go ahead to go to another pair and look for some points of interest. So here, show me. I see like 3 different points of interest. Go ahead and mark up all the points of interest that we see right here.
Okay. Is it?
Yep, that's the very top one. So you mark the top of that one, right? Wait, so remember this one, since it's a push, right? We have to mark the bottom and the middle.
Yeah.
Right. So go ahead and do it for this one.
And when it goes down, I should put it this one or low one. Is it here or
it would be right? So it's a down, right? It's a move down. So it would be this candlestick. This green one is the point of interest, right? So this green one is the last green before the whole push down. So we'll mark up the bottom of that, and we'll mark the middle. Right? So that's what we're looking for. We're looking for that last green candlestick before the push. So if we look at this right here, that last green candlestick before the push down.
So it's gonna be here.
Yep.
Where is the line? Hmm. And the bottom.
Perfect.
Isn't it?
Yep, that's it, right? So now we know, okay, if price goes up, it can bounce from here and then drop. Or it can go up and bounce from the second one and then drop. Right? If none of those work, then we know it can go up and continue up, continue up, and then drop. Right? Or it can go up, and hit that second one, and then drop. Right? So now, since price is heading down, right? Prices is starting to go down. Where can we look for price to go up? Find me the point of interest where price is going to rebound from. And you have to look left, right? You have to look at the past to find the point of interest.
Is it moving?
Mm-hmm.
So it's gonna be here.
Perfect. Yes. Yes, yes, yes. That's the point of interest, right? So go ahead and mark it with the line. Yep, you're going to use the horizontal ray. Perfect. And go ahead and mark the 2 points.
Okay. Oops.
Almost, right? One of them is incorrect. One of the lines are incorrect. You found the point of interest, but one of the lines are incorrect.
Maybe I should put like on this up there.
Yep, because when price comes down, we're going to get that first one, right? That first area, and then the middle.
This one?
Yep, even maybe just a little lower, right? So it's on the candle. Like right here. Right? Yeah, you're right. And just right on the candle, right? Right on it. And then that middle one, right? So perfect. You were able to find it, right? And now it's just remember, right? If price is going down, we're going to mark the top, right? If price is going up, we're going to mark the bottom and the middle, right?